All right, so welcome to this session. Would like to look at the continuation of the single entry and the incomplete records. The continuation of the single entry and incomplete records. So the last time we started with the net assets or the capital approach. Today, we'd like to look at the income statement or the cash book approach, which is the highly examinable one. If you would be examining it highly, you'll be examining on what you're about to look, which is the income statement and the cash book approach. That is, if you'll be examining on single entry and incomplete record. So this is a continuation. And that is the income statement slash then cash book approach. All right, so what does this approach look at, or what is it used for? So this approach is used when assets and liabilities at the beginning and end are given, as well as cash and bank transactions or the cash book. All right. So this approach is used when assets and liabilities at the beginning and at the end are given, as well as cash and bank transactions. Cash and bank or transactions, or the cash book is given. You can see that under the not-for-profit making organization that we looked at, you were given receipt and payment, right? The receipt and payment is the cash book for not-for-profit making organizations. The receipt and payment is the cash book for not-for-profit making organizations. But with the single entry, that one, it is known as the cash book, right? Cash book looks at the receipt and payment. The cash book looks at the receipt and payment. Looks at the receipt and payment. All right, so as usual, as I always do, I always give steps. I give steps under each topic just to make it more simpler. That is why my students always get the concept very easy, because I always give steps to make it more simpler. So just know your steps under each topic, and then you'll be fine. So what are the steps? So when you get a question, all right, so what are the steps? 1. So the first thing to do, so after reading the question, reading the requirement, just have your steps in mind. First of all, is to prepare the statement of affairs. or the financial position at the beginning. I believe you know statement of affairs, it looks at the financial position items. So statement of affairs at the beginning, using the assets and liabilities at the beginning. That is the first step. Second step is to prepare cash book under the not-for-profit making organization that we looked at. We would have said prepare receipt and payment. So this one is prepare cash book. So you see they are the same. The items, the steps are the same. Just that there's a slight difference. Here is saying prepare cash book under not-for-profit organization. We say prepare receipt and payment. Receipt and payment is the same as cash book. Right? Just that for not-for-profit making organization, they don't call it cash book, they call it receipt and payment. So using the cash and checks or bank transactions. So in the question, if they give you the cash book already, then you have to skip this step. So the last time when we were solving, there is not-for-profit making organization. We saw that one of the questions we were given the word receipt and payment. So we skipped the step 2 and then we moved to step 3. Move towards step 3. So you prepare cash book using the cash and bank transaction. If it has been given, we skip, move to the next one. Thirdly, we prepare the sales ledger and the purchases ledger. The purchases ledger control account. So we did control account in first semester. So you know your control account. To find the credit, sales and credit purchases. So basically to find the sales and purchases, we are preparing the sales ledger and purchase ledger to find the sales and purchases. So even the question, you have already been given sales. In the question, you can already see purchases. There is no need to prepare this. So unless in the question there is no sales, there is no purchases, then you have to prepare it using the control account, right? So usually they give you the sales and purchases. So what do you do with this step? You have to skip this step 2. That is, if there is no sales and there is no purchases. If there is sales and purchases, you skip it. Then you move to your step 4. Step 4. What is step 4 saying? Step 4 is saying that adjust expenses. You can see that is the same steps as the not-for-profit making organization. So adjust expenses with prepaid, and accruals. Expenses with prepaids and accruals only. So if there is any expense like rate unpaid, it is an expense, so you have to adjust it. Or rate prepaid, So any expense with that has prepays by it or accruals. And I believe you know accruals is the same as owings is the same as what outstanding. What else? Is the same as unpaid, right? That is accruals. And the prepayment is when you pay in advance. So they pay the expenses in advance. You have to adjust them. Right? So we did this under the not-for-profit making organization, but we'll go through them here too. We'll go through them here too. Right. You can see that once you understand the steps, you have treated two topics, which is the single entry and then the not-for-profit making organizations. All right. So prepare. Fifth one is to prepare income. So you prepare income statement. Here there is no income and expenditure. There is no income and expenditure like that. Not-for-profit making organization. Prepare income statement to find. Prepare income statement to find income to find the profit or loss for the period. For the period. And then lastly, what do we prepare? Lastly, is to prepare the statement. Prepare statement of financial. Prepare statement of financial position. Financial position. At the end. At the end, using assets and liabilities at the end. So these are the 6 steps, right? So how different is this step from the not-for-profit making? That one is 8. Here it is 6. So what is missing here? That is the preparation of the income and expenditure. Income and expenditure is missing here, right? What else? What other thing is missing here? Aside
the subscription account.
Exactly. The subscription account is also missing here. All right. So just know these steps, and then you are going to. That will guide you in the preparation. I think after speaking, you have to mute yourself. So okay. So this is the 6 steps. So you are going to apply these 6 steps, solving a question, and then you see how it goes. Once you know this system, no matter the question, you can be able to solve it. I'm not saying you can be able to balance it, you can be able to solve it. I will even advise anyone to go and balance something in the examination, or as I've always been saying, don't go and balance. Try and make sure you complete most of all the questions. 5 questions, so make sure you touch on all the 5. Don't come out and say, oh, I was able to do 4 conc, and the last one, I was not even able to touch it. It's risky. It's risky. Make sure you touch on all the questions. So if anyone having worksheet number 5, worksheet 5. Someone should send worksheet 5 to the page. Is anyone doing that? And then let me look at the previous year's page. Worksheet 5, 5. Okay. Alright, so I just sent it. Have you received it? Have you sent it?
Yes, sir.
Alright. So someone should prepare to read for us. Where is it?
Recording has started.
Please, should I proceed?
Yeah.
Okay. 𝒂𝒏𝒄𝒐𝒎𝒆 started a retail shop 3 years ago. 𝒂𝒏𝒄𝒐𝒎𝒆 does not keep proper accounting record, and the income tax authorities had requested that she submit proper records for her income tax assessment. 𝒂𝒏𝒄𝒐𝒎𝒆 revealed that the following receipts and payments were made by her in the year 2015. Motor expenses,
Wait,
thousands.
so what makes this question a single entry and incomplete records
The statement she
question?
does not keep proper accounting record.
Exactly. Because in the exams you'll be given a lot of information, a lot of questions, and it is your duty to decide which of them is which topic. So here, does not keep all books of accounts makes it a single entry. Okay. Continue.
Motor expenses, 1,200. Rent paid, 500. Salaries and wages, 4,000. Cash paid to suppliers, 27,800. Cash received from debtors, 37,650. Advertising expenses, 1,450. Rates, 1,400. 𝒂𝒏𝒄𝒐𝒎𝒆 is certain that apart from some drawings made from cash received, all receipts and payments has been recorded. You also discovered that she withdrew goods worth 500 cedis from the business for her friend Kennedy as a birthday present. Discounts allowed to customers amounted to 1,020 Ghana cedis, and discounts received was 770 Ghana cedis. Customers returned 40 goods worth 2,500 Ghana cedis. Also, 1,250 Ghana cedis worth of goods were returned by the business to Torong Kala. The assets and liabilities of the retail business in the year 2015 are given as follows. Motor vehicle, as of December 2015, December 15, 10,000, and January 15, 10,100.
According to my screen is 80.
I'm reading directly from the question you sent.
It's 15. Okay. But here it's 18. I think I've downloaded it. Read from the screen.
Okay. The assets and liabilities of the retail business in the year 2018 are given below. Motor vehicle 10,000 and 10,100. Furniture and fittings 5,400. Okay. Stock in trade, sundry expenses owing, sundry debtors, sundry creditors, wages accrued, rent prepaid, and cash. You are required to prepare an income statement for the year ending December 2018 and a statement of financial position as at that day for 𝒂𝒏𝒄𝒐𝒎𝒆 enterprise.
All right. Thank you very much. So now mute yourself. Okay. So you can see that. Okay. Who is giving me the feedback? Mute yourself. Okay. So the question says that you are required to prepare the income statement and the statement of financial position, right? The question gave us two requirements. Get the income statement and the financial position. But we cannot just go to the income statement and the financial position. We cannot just get these two without going through the steps, right? So that is why I said that there is a need to go through the steps, right? To be able to get the income statement and the statement of financial position required by the question. So what is the first step? Step 1. So it means the question just wants the income statement, which is step what? Income statement is step what?
Step 5.
Step 5. And then the financial position is the last step.
Yeah.
All right. But we have to start from the step 1. So I think this would be known as the workings, since that is not required by the question. So workings. So for the workings, because I'm teaching you, I'm writing the step. But if you are answering in your exam score, you don't write steps. So what is the first step that we said? What was the first step?
To prepare the statement of affairs at the beginning, using the assets and liabilities at the beginning.
Exactly. So you are just going to go through this. We are moving through this. The preparation of statement of affairs At the beginning. So here, the beginning is January 2018. So once you answer a question, give me, because I don't know why today is giving me. So you can, some people can use all the total assets minus the total liability, right? But I'm using the non-current asset. Right. So what is the non-current asset? You can see we have been given the assets and liabilities at the end, December 2018, and at the beginning, this January 2018, right? So this is the beginning item that we talked of. They had prepared a statement of affairs at the beginning, using the assets and liabilities at the beginning. So these are the assets and liabilities at the beginning, right? These are the assets and liabilities at the beginning, right? So what are the, well, motor vehicle, right? Motor vehicle. Motor vehicle is 10,100. What else? You can see 10,100. Furniture and fittings.
Furniture and fittings, 5,400. Hey, 5,600.
Any other non-current assets?
No, it's finished.
Then we have the current assets. Stock in trade is 37. And zero. What else? Sundry debtors.
So, but with that one, we have drawings on it too.
You have drawings?
Yes. The initial question, they said, where is it?
They say what?
They said, Mami Adwa, the owner. Wait, no. From some drawings made from cash received, all the others were recorded.
We are preparing at the beginning, right? If all these items are as at the end.
What?
And besides, does drawing affect debtors here? When you are preparing an account, do we adjust the drawings debtors?
No, that will be in the income statement.
That is when they withdraw goods. When they withdraw goods. So it doesn't affect here. So let's continue. What other current assets? Rates prepaid. You have paid the rate in advance. So that is an asset, right? It's an asset, right? Paying the rate in advance. Rate prepaid. You have paid in advance. So the debtors is how much? Sundry debtors is 25. No. Rate prepaid is giving us 100. What other assets? Cash. How much is the cash? 2350.
3,350.
So what else? That is it.
Mm.
Are you computing?
Yes. The total will be 24470.
That one.
A non-current is 8770.
Then we less our current assets, current liabilities. Current liabilities, what do you have? Owings is a liability, right? Sundry creditors. So let's start with sundry creditors. Sundry creditors. Creditors is what? 875. Then um, sundry expense owings, 300 dash. So it will not come here. Okay. Then we have what? Wages accrued. Accrued means owings. So wages owings is 220. Wages owings 220. What else? That's all. 95. Seven six seven five. So this is our working capital. Working capital is what? Is current asset minus current liability. Current asset minus current liability give us working capital. You add the working capital to the non-current asset. So adding this plus this is giving us what?
Two three three seven eight.
7 what?
8.
Give us that idea. Any phone spend it. You have to know that one.
2 3. I'm getting 7 5.
Yeah, 750.
So this is the net asset. Net asset, which is the same as the opening capital or the opening equity. Opening equity. So we are done with the step 1. Quickly, step 2. Step 2. So let me say this is workings number 1. Workings number 2. Alright. So the workings number 2, what is the second step?
Second step is to prepare cash book using cash or bank transaction.
So using the cash and bank transaction. I'm sure you have been given the cash and bank transactions.
Yes.
So for the cash book, we know that the debit side is the receipt side. And the credit side is the payment side. So can you all see this? If Rambo revealed the following receipt and payment were made by her in the year 2018. Motor expenses, rent. So these are the cash and bank transactions, the receipt and payment transactions, right? Yes. So from the the cash book is having a debit balance, right? It's having a debit balance. So we can see that we've been given cash here, which is a cash book item. So we have the opening balance and then the closing balance. The opening balance is January 18, and the closing balance is December 18. December was 18. So we have the balance BD, balance brought down, which is for the January 18 amount is 2350. 2350. right? And then the closing will be somewhere here, right? The closing will be somewhere here. So balance CD, what is the balance CD amount? Is 1650, 1650, right? That is the closing balance. So if the BD is at the debit, the CD will be at the credit, and vice versa. All right. Now let's proceed with our cash receipt and payment, or the cash and bank transaction. So here, receipt and payment were motor expenses 1,200. The motor expenses, is it a receipt or is it a payment?
Payment.
So means it will be at the credit side. So motor expenses. How much is the motor expenses? That is 1,200, right? Then we have rent paid. Rent paid, of course, as the name goes, payment. So it will be at the payment side. Rent paid. Amount is 500. What else? Then we have wages and salaries. Wages and what? Salaries. So assuming they had prepared the cash book for us, we would have jumped it to step 3. But here, they've not prepared it. They have given us the items for us to prepare. That is why we are preparing it ourselves. So the wages and salaries is how much? It's 4,000. Right? Cash paid to suppliers. Cash paid to suppliers. So cash paid. That is how much? 27.
1,800.
27,800. Then cash received from debtors. Will it be at the payment side or at the receipt side?
Receipt side.
Yes. So cash received. Cash from received from debtors. What is the amount? 37, 650. What else? Advertising expenses. Advertising. Advertising expenses. What is 1450? Then we have rate. Rate is how much? 1,400. Okay. So now that we have this, we balance of the account. We balance of the account. What will be the total? So the highest will be the balancing figure. Some of you should be doing the debit side, whilst someone is also doing the credit side.
The debit side is 40,000.
Out of the credit side.
38,000.
So you guys, I'm getting 38,800. 38,800. So the 40,000 will be the balancing figure, and the difference will go to drawings account. The difference will go to drawings account. So the difference so from here, summation of all of this on our there. So I think I'm getting 38,800. So what will be the difference? The difference will be 40,000 minus 30.8. 40 minus 30.8, 38.8, 1.2. So that is 1,200. The difference is 1,200. Right? So 1,200. That will go to drawings. So I think here there is a big CD here. So I cannot write the difference as CD again. So it will go to drawings. Assuming there is no CD, I would have written the difference as CD. And since there is CD there, I will just write the drawings. It will go to drawings account. So that is the step 2 for you. That is the step 2 for you. Let's move on to the step 3. Step 3. So step 3. What is the step 3 about? That is workings 3. What is the workings 3 about? Workings 3 says we should do what? We should prepare sales and purchases ledger control account to get the sales and purchases. From this question, were we given sales and purchases? Were we given sales and purchases? Were we given sales and purchases?
No, please. We weren't given, so we have to find for it.
So we have to prepare. So we prepare our sales ledger. Control account. If you don't use this question to understand single entry, income statement approach, then I don't know the question that you use to understand. All right. So here we said under control account. I think when you are done, you should learn how to operate the device. The lady who has been speaking, when you are speaking, I don't know you're the one reading. What's your name?
Lydia.
Yes, so Lydia, when you are done reading, mute your mic.
Okay.
All right. So now let's continue. So then we said the debit side increase what the debt of our customers, right? So the sales ledger control account is prepared to make some reconciliations, right? To make some reconciliation in terms of our debt. So any item that will come to the debit side would increase the customer's debt. So here to increase their debt, and then for the credit side to decrease their debt. So decrease their debt. To decrease their what? Their debt. So you can see, let's go to the debtors. Where are the debtors? Can we see the debtors? Sundry debtors 373570 and then 2570. So this is the beginning. This is the beginning, and then this is the end. The beginning and then was the end. So the beginning becomes the balance brought down. Balance brought down 2570. And then the closing balance CD is 3570. 3570. Right? So now let's come to the items. Items that will go into the sales ledger control account. What are the items? Cash received from debtors. Will it increase their debt or decrease their debt? Cash received from debtors. Will it increase the debtors' debt or decrease their debt? When the cash received from debtors, they are paying a cash of 37,650. Of course, that would decrease their what? Debt. So cash received. Cash received from the debtors, which is 37,650. It will decrease the what? The customer's debt, right? What else? What other item affects the sales? Let's look at additional information and see. If your ambo is certain apart from some drawings made from cash, all receipt and payment have been recorded. You also discovered that she withdrew goods which cost 500 from the business for her friend Kennedy as the birthday present. Discount allowed to customers amounted to 1030. So discount allowed. When you allow discount to customers, does it increase their debt or decrease their debt? So that would decrease their debt because you are giving them discounts. So discount allowed. Discount allowed of what? 102. 1020. That would decrease their debt. What else? What other thing? Discount received. That would be for the purchases ledger. Customers returned 40 goods worth 2,500. Also, 1,250 worth of goods were returned by the business for wrong color. Okay, so customers returned 40 goods. So the goods that is returned was inward. Return was inward. So when customers return goods, does it increase the customers' debt or decrease their debt? It will decrease their debt. They were owing 10,000. Now they've returned 2,500. Means their debt will no longer be 10,000, but it will be an amount lesser than the 10,000. So the return inwards will decrease what their debt. So that is 2500. 2500. What else? This is return outwards, and that will go to the purchases. That will go to the purchases control account. Any other thing? All right. So that is it for the sales ledger control account. So the total. Is there any difference? So what is the total? So 44740. 44740. 44740. 44740. So the difference will be the credit sales, will be the sales that we want. The credit sales. Credit sales. And the difference?
42170.
42170. So that is for the sales ledger. Move on to the purchases ledger. So you see we have credit sales. So if you want total sales, assuming in the question they give you a cash sales, then the total sales will be the credit sales plus the cash sales. But if there is no cash sales, then the total sales is the same as the credit sales. Right? If in the question they give you cash sales, you add it to the credit sales that we found here and get a total sales. That's what you use to prepare your income statement. But if there is no cash sales, then your total sales become the credit sales, and that's what you send to the income statement. All right. So now let's go to the purchases. Purchases ledger.
Hello.
Yeah, hello.
Please, can you go over the total sales again?
So, see when you are preparing the income statement, what is the first item?
The sales.
Yes, so the sales that you have always been saying, it is credit sales plus cash sales. When you are selling, some of your customers will buy on credit. You record them as sales because you have sold your goods, but just that you have not received the money for it. And some of them, when you sell it, you receive cash, right?
Yes, please.
Yeah, so the total sales is the credit sales plus the cash sales. So the control account, whatever we are doing here, we are doing it to get the credit sales, the sales that we are here to get the money for. So the credit sales is 4 to, and I'm saying in a question. Remember, I think last year or last 2 years or for the past years, one of the budgets we dealt with this, and then I think they went and then they saw cash sales. They were doing cash sales, something like that. So I'm saying that when you see cash sales in the question, you add it to the credit sales that you find to get a total sales, and then this is the total sales that you send to the income statement. The one who asks, are you okay?
Yes, please. So please, would you record the cash sales in the sales ledger account, control account?
In the what?
Would you record the cash sales in the sales ledger control account if you
No,
were given
please.
it? Okay.
Cash sales does not come to the sales ledger control account. I'm sure when we were doing control account, we said some of the items are not recorded in the control account. And I think cash sales was also listed that you don't record it in the sales ledger control account.
Okay.
You do this just to find the total sales to be sent to the income statement. So after getting the credit sales, the control account that we are doing here, we want to get the credit sales. So as part of the steps, step 3, we said prepare the sales ledger control account to get the credit sales. So this is the credit sales that we are getting, 42,170. When you get the credit sales, if there is no cash sales in the question, then this 42,000 becomes our sales when we are preparing the income statement. But if there is cash sales in the question, then you have to add that cash sales to whatever you've gotten, which is the credit sales, and you get the total sales.
Okay. Thank you.
So, sir, it means that it also applies to the purchases as well.
Sorry?
Does it apply to purchases as well?
Exactly. So credit purchases and then cash purchase. If there is cash purchase, also do that. So here, the purchases ledger control account, we are buying from our suppliers, right? So here we are the customers to the suppliers, right? So you can see that this one, this side, the debit side decrease our debt, and the credit side increase our debt. Right, increase our debt. You see, it's opposite of the sales. The sales, the debit side rather increase and the credit decrease. They are debt. They are talking about our customers. When it comes to purchases, we are the customers to our suppliers. So we decrease our debt. We the customers. Right? We are the customers to our suppliers. You know the difference. Yes. So any item that would decrease and then you bring it here. Control account. Now, some people when they are teaching, they just teach you to chew it that, oh, this item is there on the debit side and this one is the credit side. And then when you come to the sales, just opposite, you translate it. But then it's better you understand that any item that decreases our debt and you analyze the item. So here, let's go to the table. Do you have any creditors, sundry creditors? So the purchases ledger control account is the same as creditors ledger control account to purchases is the same as creditors. And the sales is the same as what? Debtors. Sales is the same as what? Debtors. Right? The debtors or the receivables. Sales, debtors, receivables. And then the purchases is the same as your creditors. Right? So sundry creditors. Sundry creditors, what do we have? We have 1,240 at the closing, and and then the beginning is 875. Beginning is 875. Purchases ledger, the creditor's ledger control account. Is it having a debit balance or a credit balance?
Credit balance.
Credit balance. So the balance BD, the opening balance would be here. So what is the opening balance here? 875. 875. 875. So if the BD is here, the CD will be here. And that is all right. So now let's go to the additional information. Anything about that? So discounts we allowed, discount received. So here the discount allowed was for the sales. Discount received will be for the what purchases or the creditors. That's 770. 770. 770. Discount received. So discount received is 770. We receive the discount 770 from our suppliers, from our creditors. So will it increase our debt or decrease our debt that we are owing them?
To decrease our debt.
To decrease our debt. So it will come to the decrease side, which is the debit side. So here, discount what received. So that will be 770. Right? Is there any cash payment to our creditors? Do we make any cash payment? Cash payment.
Yes.
So, okay, so we made a cash payment of 27,800. This cash payment that we have made, will it increase our debt or decrease our debt? We've made a cash payment to our suppliers, 27. Will it increase our debt or decrease our debt? So it will decrease our debt, cash to suppliers, and that is 27,800. 27,800. What else? Discount allowed, discount received. Customers returned 40 goods worth 2,500. This 2,500 was for the customers, or the sales was for the sales. When we come to the purchases, 1,250 worth of goods were returned by the business. We are the business for the wrong color. So we returned 1,250 goods to our suppliers. That will increase our debt or decrease our debt. That would definitely decrease our debt. Will decrease our debt because we are returning goods to our suppliers. So our debt in the business or with the suppliers would no more be the same. So return outwards. Return outwards is 1250. Any other item? I don't think there's any other item. To find the total, the difference will be credit purchases. And that will be here. The difference will be credit purchases. We are done with step 3, purchases, and then the sales. So we move to step 4. Step 4. Step 4 is what? What is step 4 saying? Step 4 is saying that we should adjust what? Expenses with prepays and accruals, right? Adjust expenses with prepays and accruals. Right. So what are the expenses with prepays and accruals? Expenses with prepays and accruals. Are they? Right. So we have what? For the expenses, wages accrued, right? Rate prepaid, sundry expenses owing. So the owing is accrual, right? Wages accrued, accrual. Rate prepaid, that is a prepaid. So 1, 2, 1, 2, 3. So we have 3 expenses with prepays and accruals. We have 3 expenses with prepays and accruals. What is the first one? So the rate. The rate is a prepaid, right? Prepayment means you have paid in advance. You are owing rate and you have paid it in advance. So that is an asset. That is what? An asset. That is an asset. Because you have paid in advance. Rate prepaid. Expenses have what balance? Expenses have what? Debit balance. Right? So the rate prepaid is an asset. It's an asset. So assets have what balance? Debit balance. Assets have debit balance. So the breakdown will be at the debit side because rate prepaid is an asset and assets have debit balance. So prepayment, what is a prepaid? Prepaid balance brought down. What is the balance brought down? Rate prepaid. Balance brought down is 100. And what will be the closing? Closing prepaid. Closing balance is 150, right? 150. Right? 150. And then how much cash did we pay? How much cash did you pay for the rate? Going to the receipt and payment. How much did we pay? Rate, we paid 1,400. We paid 1,400. So you see, this is double entry. This is double entry. In the cash book, let's look at the cash book. Cash book that we prepared. In the cash book, rate is at the credit side. We credited the cash book in the name of rate. Credited the cash book in the name of rate. What do we do to the rate account? What do we do to the rate account? We are going to debit the rate account in the name of what? Cash. Our cash book. An amount of what? 1,400. What else? I think that is all. That is all. So what will be the total? Total is 2 Is it 1,500? 1,500. The difference will go to the income statement. Difference will go to the income statement. The income statement. Difference will go to the income statement. Alright, so we are done with the rate prepaid. Now we move on to the next expense with accruals or prepaid. What is the next expense with accruals or prepaid? The next expense with accrual or prepaid is wages accrued, the wages. So let's adjust the wages as well. Wages. Expense accrued or wages accrued is a liability, right? Accrual is what? A liability. You are owing wages, so it's a liability. Liabilities have what balance? They have a credit balance. Therefore, the wages owing or the accrual balance brought down will be how much? The balance brought down is 220. Is 220. And then the closing balance owings. If you have a question, you ask. So, but then because I have to be fast, so I'm just teaching. 320. So balance brought down, balance CD. Then how much did we pay for the wages? Go to the cash book. How much did we pay for the wages? That will be at the payment side. Wages. How much did we pay for that? We paid 4,000. Right? Paid 4,000. Wages and salaries. 4,000. So it was a credit. It was credited to the cash book. So it will be debited here in the name of cash book. In the name of cash book 4,000. The name of cash book 4,000. What will be the total? That will be 4320. 4320. So the difference will go to the income statement. An amount of how much? 4320 minus 220. So that is giving us 4100. 4100. We have adjusted the wages. What is the next expense with prepaid or accruals? The sundry expense owing. Sundry expense owing. So sundry expense owing. So owing is a liability. Liabilities have credit balance. Liabilities have credit balance. So owings brought down will be what? Owings, the beginning balance will be what? Is it that? It will be that. And then the closing balance, owings. Closing balance is what? 300. The closing balance is 300. How much did we pay for the owings? We go to the cash book. Cash book carries reflect how much did we pay for owings? For sundry expense, sorry. Sundry expense. We paid 800. We paid 800. Paid 800. So 800 for in the name of cash. Or pursue cash book 800. Sorry. Right. So how much is it? 1100. 1100. So income, the difference will go to income statement. income statement, an amount of 1100, right? So now we are done with step 4. So step 5 is actually answering the question. That is the income statement for the year ended. So moving on to step 5. That's what the question actually requires, which is the income statement, preparation of the income statement. So, preparation of the income. So income statement for the year ended. For the year ended 31st December. So here it is 2015. So I think the date now is 15 instead of the 18 that I used. So it's 15. We have the sales. So of course, as I've been using selling price minus cost price is equal to profit. Is equal to gross profit or loss plus income minus expense is equal to your net profit or loss. So were we given cash sales? Were we given cash sales from the question? Then we add the cash sales to the credit sales that we have computed. So I think there is no cash sales. Here, this sales is credit sales. And what is the amount? How much did we get for the credit sales? How much did we get for the credit sales? So the credit sales, we had 42,170. 42,170. 42,170. Right. Is there any return? Any return in what? I think I saw something like that. Less return inwards. Less any return inwards. So what any return inwards? What is the amount for the return inwards?
2020
His customers returned 40 goods worth 2,500. So that is 2,500. 2,500. 2,500. That's 2,500. What are you getting? That will be so getting 39,670. Right. So we are done with the selling price. We are done with the selling price. Now we go to minus. So the minus will be less cost of sales. The cost of sales represents the cost price. So, what is the first thing? First thing is the opening stock. Stock in trade. Can you see the stock in trade? That is 3750. That is the opening. So that is 3750. Add purchases. Here the purchases, we have credit purchases. Right.
42.
Meaning there is cash purchase, we have added it. So how much is the credit purchase?
30185.
And so that is 30185. So 30185. What else? Then the release what? Release return outwards. If there is any return outwards. And of course, I saw we also return to the to our suppliers 1,250, right? So return 1,250. What is the total for this? So getting 33,935. Right. Let's return outwards. And then if there is any goods drawn for personal use, right? You have taken the goods, so that will reduce the goods in the business. Is there anything like that? You withdraw some goods.
Yes. 500.
If your Rambo is certain that apart from some drawings made from cash received, all receipts and payments have been recorded. You also discovered that she withdrew goods which cost 500 from the business for her friend Kennedy as a birthday present. So this is withdrawing the goods. That will reduce the goods we have in the business. So that will less it. Less goods drawn, right? And that is 500. So how much will we have?
4570.
So 32185. 32185, right? There will less closing stock. So any closing stock. So stock in trade at the beginning, the closing 4570. 4570. 4570. If you less closing stock, whatever you get, the cost of goods sold. Then if there is any wages, you add the wages to the cost of goods sold to get the cost of sales. Do you have any wages like that? Not wages and salaries, but then just wages. I don't think we have wages. All right, so cost of sales, this becomes our cost of sales. So how much is it?
27615.
27.
27615.
27615. So that is the cost of sales. You deduct it from the sales. So it's only price minus cost price because it's deducted from the sales.
12055.
12055. This is our gross profit. This is our gross profit. From the gross profit, what do you do? If there is any income you add, do you see anything like income? Like another income we can see from the question.
Discount received.
Alright, so discount received is an income. So add other incomes. So discount received. How much is the discount received? 770. Okay, so 770 discount received. What else? Any other discounts? Any other discount?
No.
Okay. So what is our gross income? Our gross income of what?
12825.
1, 2,
825.
2 what?
825.
825. So this is our gross income. What do?
Less expense.
We find the expense, we less the expenses, less operating expenses. What are the operating expenses?
Motor expense.
Motor expenses. Motor expenses. That's given us how much?
Yeah.
Is anyone calling me?
Yes, please.
Okay.
So, like with the motor, the cost and this, like, there's a difference between it, isn't it? Depreciation or something.
What?
A bit
The what?
depreciation.
And what? Is that
I
depreciation?
am asking. Yeah, I am asking whether it's a depreciation. We will treat it as depreciation.
Which one? Depreciation will come inside,
Yes.
but it's not got to pay. It's also an expense.
Okay.
Right. So motor vehicle is how much? 1,200. What of the rent paid? Rent paid. So these are where you are paying the items. Rent paid.
500.
500. What else? Sundry expense. Sundry expense will make some adjustment. So you have to go and pick the adjusted figure. Sundry expenses will make some adjustments. What is the sundry expenses adjustment that we made? How much did you get? How much will you go to the income statement? 1100. 1100. Sundry expenses 1100. 1100. What else? Wages and salary to be made and expenses. So here, what? That was workers number what?
4,100.
That for which one? Wages and salaries.
Yes, please.
$4,100. Right. So this one, bracket number 4A. Let me see 4A. This is 4B. Let me go and name them 4A, 4B. We will last. Okay. So this is A. This is B. And then C. Right. Okay. So this is 4C, 4B. And then rate 4A. So that is workings 4A. So what do we get for the rate?
1,350.
1,350. What else? Advertising expenses. Right. Advertising expenses.
1,450.
That's how much? 1,450.
Yes.
What else?
Discount allowed.
Discount allowed. Okay. Discount allowed. Discount allowed is 1020, right? Yeah. And then what else?
Sundry expense.
Sundry expense. Sundry expense, I think we have done that already. That's under workings.
Okay, right.
Then depreciation will come here, right?
Yes.
Depreciation. Depreciation is also an expense. Motor vehicle. What are the assets? Motor vehicle. So motor vehicle, what was the cost? At the beginning, it was 10,100. And then now it is 10,000. So there's a depreciation of how much? 100.
100.
Yeah, 100. And then furniture and fittings.
200. Those on 5,600 and
Furniture and
5,200.
fittings.
Difference.
Yeah.
Difference 2,200.
200. What else? So that's it. Right.
Yes.
I think that's all. So give me the total expenses. What are the total expenses?
One is there. Is there.
11020. Okay.
The total expenses is 11020. If you deduct it from this, what are you getting? Then the last step, step 6, which is the financial position that the person wants. Statement of financial position as at 31st December 2015. Right. So what we have the non-current assets. Non-current assets. We have the cost, we have the accumulated depreciation, and we have the net book value. Right. So the motor vehicle, what was the cost? At the beginning, 10,100. Depreciation is 100. It's given us 10,000. Then we have the furniture and fittings. Furniture and fittings, 5,600. And depreciation of how much? 200, right? 200. And we are getting 5, 4, this.
5,400.
So this plus this is giving us 15,000.
400.
Then current assets.
Offset.
Current assets. We have the stock.
Closing
We always use the closing stock, which is 4570. Closing stock 4570. Debt is family debt.
7.
Family debt is 3570. So the level we prepare at the end, right? So that's why we're reading the at the end figures. At the end. So rate prepaid. Rate prepaid is an asset, right? We make some adjustments. Okay, even the adjustments will even go to the income statement. But here we use the figure, the closing figure at the end figure. So rate prepaid at the end. Then cash. Cash to use the closing one. Cash 1650. Pay at the end, using the assets and liabilities at the end. Alright, so what is the total? Then we come to less
944. Sorry, 9940.
the less current liabilities. Current liabilities, what they have? Sundry creditors. Sundry creditors. How much is the sundry creditors?
1,240.
1,240. 240. What else? Sundry expense owings is a liability. Sundry expense owings is a liability. Owings is a liability. Outstanding is also a liability. The first one, we didn't bring sundry expense. I mean, at the beginning, because it was dash. So by here it is 300. We are bringing it. Here it is 300. We are bringing it. Wages accrued is also a liability. All accruals, all owings, all outstandings are all liabilities. Wages accrued. What is the wages accrued at the end? 320. What else? Rate prepaid, we've already brought that. Yeah, so that is it. That is it. What is the total?
Hmm? 1860.
20. Okay. So if we deduct, we are getting our working capital. If we deduct this from this, we are getting our working capital.
Eight zero eight zero
Working capital 8080. 8080. You add the working capital to the net asset, the net current asset. Sorry, non-current asset. Non-current asset. What do you get? If you add the working capital to the non-current asset.
23480.
23
480.
460
480.
480. So this will be one of the balancing figures, right? This should be one of the balancing figures. So this will be our net asset. Then you come to finance by what? Equity.
Opening equity or opening capital.
Opening equity. So from the beginning,
Oh,
prepare the opening
yeah.
equity. How much is it? The first item prepared. Opening equity. Prepare the statement of affairs at the beginning. What was the opening equity?
23375.
23375. I believe you all can see where we picked this figure from. That was the first affairs that we prepared. Statement of affairs. Opening equity. So that would be the equity that we use 23375. Then add what? Net profit. If you add the net profit, how much did you get for the income statement? Net profit. Income statement net profit. 1805. 1805. Then we left the drawings. The drawings, I think there are two: cash drawings and then goods drawings. So goods and then cash. The goods drawing was how much? I don't know, 500. I did something like
Yeah, 500.
goods drawings was 500. And then the cash drawing. The cash drawings, we prepared the cash book.
Or 1,200. Was it 1,200?
When we prepared the cash book, the difference, we said to go to drawings. Do you remember that? Where is it? Cash book. And the difference, we said send it to drawings. That's the cash drawings. CD was already there. So the difference, we go to cash drawings. Difference will go to cash drawings.
Mm.
1,200. So if you add the two, 1,700. So 1,700. What else? Is that all?
Yes. That would be
So what to be our capital employed?
3,480.
Capital employed must be equal to the net assets.
Yes, 2,340.
2,3,4,80. So at the end of the day, our capital assets, net assets should be equal to the capital employed. So what is important to me is for you to know your steps. And no matter the question, you should be able to do something and get at least, if it's 15, you should get at least 12 or 10 over 15. And you are good to go. It is only the one who wants to balance it and wants to get 15 over 15 that would waste time on it. Because if you want to balance, it means you have to spend a lot of time on it, while there are other questions waiting for you. So my focus is not for you to balance. My focus is for you to go through your steps and enter more transactions because they are going to mark the ticks. The more you do, the more you earn. Right. So this is for today. And if there is any question that is to come and that's internet, it's likely you get something like this where you are going to use the income or the cash book approach. So this question, we were given the items to prepare the cash book. In another question, the cash book might be prepared for you to just use it. So you go through your step. When the cash book is prepared, which is the second step, you just skip it, move to the third one. If the third one too, they've already given you this, I think the sales or what, something. You move on to the next one. So that's it. Just go to the exam tool with your steps. After solving a lot of questions, you will go with your steps, and that's what is going to guide you. No matter how tricky the question is, you have to get the maximum ticks. Get your maximum ticks there, right? So accounting, we don't feel accounting. We don't feel accounting. You feel accounting at your own risk means all right. So on that note, thank you very much for coming today. I know we've wasted so much time just because